Okay, hi everyone. I know I'm on YouTube, and I think I'm on Facebook as well. I gotta figure out an easier way to tell if I'm on Facebook or not. It's, it's always a challenge. It's hard to tell. Um, okay, well, I think I'm on. It's close enough. I think it's working. Okay, so welcome everyone to another episode of my trading vlog here. Not much action today. It was kind of a weird sideways kind of a day. I got chopped up quite a bit in the morning. And as you already know, or if you've been following me, you would know that, Wednesdays and Thursdays I trade more of my mentor's ideas than I do my own ideas. And it was not a very good day. He didn't do very well. I didn't do very well. And so we were sitting on realized losses. We lost about $100 today. Definitely gave away $100, donated it to the market. I'm also sitting on, as you can probably see right now, right here on the New Zealand dollar futures, sitting on a little bit less than $300 worth of profit on this contract, and a couple other positions as well. I'm also in the euro, which goes against the New Zealand contract, so I'm like betting against myself a little bit here, and that's not a good thing, right? It's not a good place to be in at all. But I just left it because I didn't get stopped out in either way, in either direction. And looks like towards the end of the day, the my S&P trades started to work a little bit. I'm not exactly sure how this panned out, but I do know that I have to modify this. No, okay, maybe that was on purpose. I have to get rid of this, is what I mean. Okay, all right. So let's start off with the Thursday. The thing that's unique about Thursdays, which is the natural gas news breakout. And just like yesterday, very muted, very underwhelming, right? There's not much action happening in the natural gas futures, that much at all. And I did get chopped up a little bit because I attempted the opening range here, which is not that. So let's get rid of this. And let's talk about the opening range, which was, where do I mark it? Which was this right here. Okay, so this doji looking candle, mind you, I'm on the mini contract, so the candles are going to look a little stupid, like they're not really moving, because it's a derivative of a derivative, which is the natural gas contract. It's like a derivative of that, so you needs to have a lot more movement in the natural gas in order to even have for any wicks to show up at all. So let's look at what we're dealing with here. Let me just do a little bit of a better job managing my my stream here. Okay, so this is the opening range. Very muted response. Now, if I were to take the break down, I would have gotten stopped out. If I took the breakout up, I would have gotten stopped out, right? And I attempted to take I mean, my teacher was saying don't do it, right? But I was like, but I kind of want to take a shot at the breakout up because of the trend. The overall bigger, well, like on the 30 minute it doesn't really show well, but like on the larger time frame, I guess you can say, well, this segment of it is a little bit of an uptrend. But obviously, there was a reason he said don't take it. I just didn't listen, and I lost but it was a small risk, right? I lost. I think I gave myself an extra tick, right? So I lost 3 ticks here, which turns out to be something like $50 or less. I'm not sure. And I took a small shot, and I just wanted to see what would happen, and it did not work at all, right? So learned my lesson there. But even throughout the rest of the day, kept chopping up and down, right? Because look at the 10:30 news break. Okay, where are we looking at here? Oh, okay, we are looking at this candle. So the 5-minute candle, this is the 10:30 news break. Yeah, you get a little bit more movement, I guess, based off of the candle here. Let's go to the 15-minute, because we used the 15-minute range prior to the news breakout to set up the breakout. So we have natural gas. This is the 15 minutes prior to the news. You can see that the candle opened here, shot up, and then it shot back down. So it's like, how much are you going to risk to go up, right? Because you didn't. First of all, my mentor said, don't take this, because if you were to actually go down to a lower time frame, it's not basing. Like, what you want to see is this kind of like very rangy kind of behavior, right? This is what you want to see. Like, it's just stuck in between these couple of ticks, right? But what it was actually doing, the 15 minutes approaching the news, was it was actually starting to tick downwards and trend downwards. That increases the amount of risk that I want to take. I have to take triple the amount of risk instead of that I would normally take, because of the range. The 15-minute range is 3 times bigger now, and it's there's a clear direction. But here's the thing, like, even if, I know hindsight is 20/20 and all, but if you were to have taken this, you would have barely gotten a 1-to-1 to the downside, at best. And I usually won't take profit at a 1-to-1 unless I'm taking multiple contracts and I want to secure a free trade. But I don't do that on a news breakout, because it's too risky. The whole point of a breakout is you don't know which way it's going to break out to, and so you take both, and you're taking some extra risk there for sure. But which is why it's important to make sure the reward, you have enough room to make up for that risk with reward. There just wasn't any. So you could look at it and be like, hey, you could have gotten 3 ticks out of here or something like that. But that is not the kind of game that I want to be playing. I know I've done that before, where I'm happy with a 1-to-1 trade as a win, but long term it's not sustainable. I gotta get at least a 2-to-1 minimum, preferably 3-to-1 and higher, right? And this is what I'm looking at again for the euro. But I'll talk about the euro and the New Zealand trade in together, because they're both in the currency markets. But right now, I'm just explaining where my losses came from. I took a hit on the crude oil, and I also took a hit on a scalp kind of a trade off of the S&P in the morning. And this is not really my thing, but this is also why I follow my teacher. He is a professional. He's probably the most versatile trader that I've ever seen. Most other successful traders that I follow have 1 or 2 moves that they're just really, really good in. They remind me of kind of like a Klay Thompson or Steph Curry if you're watching if you like basketball. They're just really good at shooting the ball. But this guy is more like a kind of like a LeBron James kind of character, where he can do it. He has so many tools under his belt to do anything and everything. He'll do long-term trades, short-term trades. He'll even switch up to like volume bar charts and do scalps. And I'm just like, this is one of the most versatile guys I've ever seen. And so that's why I follow him, right? Because I feel like there's a lot to learn from him. And versatility, I think, is a virtue, even if I'm not going to be a versatile trader myself. So I get a lot of learning experience. That's the positive way to say it. But with that comes some losses. I took a hit. You know, I'm not gonna lie. And he was bummed about it too, because he had the right read, and I totally know what he was feeling. He had the right read. He's like, oh, I think the S&P is gonna bounce off here and go up here, but it like stopped him out by like just this much. And I don't remember where it was. It must have been up here. It had to have been up here. It was right before the opening breakout, because we got stopped out on the opening range. So I'm on a 5-minute chart here, and the opening range is huge, right? It's huge, because the opening 15 minutes would be 3 5-minute candles, which is 1, 2, and 3. So it's like, boom. That's a really big opening range. It's not. I mean, I've seen bigger, right? You know, no pun intended. But it's considerably. It's a considerable amount of movement, considering what we've been seeing the past few days. So you know, we took a shot before the opening range, which was probably where the mistake was, right? And to his credit, this wasn't like exactly just his idea. He was also just following someone else's suggestions, like, hey, would this be a good idea? Is this zone right here, I think the person was asking, is this zone right here a good one? He's like, it actually is not bad, let's take it, right? The problem is, if you look here, we got stopped out on the opening range, right? Like right here, or right before the opening range. But it did shoot up to the upside, right? So there was like, they were right. This zone worked, but if you went too strict on your stop and you made your stop too tight, it wasn't enough. You didn't have enough breathing room to let the trade work out. And so this is why, for me, and like, I don't know what's good or what's bad, but for me, like, I always use the fixed amount of risk based on what I'm allowed to take, right? So I just let things run. Like, I take a fixed amount of risk in terms of the dollar amount, which is a different style than what he's using, right? So if you use trading, if you use a risk size like this, which is just the size of the candle, then yes, you take a lot smaller risk. Therefore, you're able to get, like, you know, you're able to squeeze out much more of a return. But then you get stopped out, and you feel, and like, to me, that's a worse feeling. And what's more important than risk with your trades is risk with your emotions, risking like going on tilt and letting like revenge trading type of attitude take over. Nobody's immune to that. Even he was feeling some of that today, and he's a professional veteran of like 25 years, right? And so if he's vulnerable to getting upset and going on tilt, then so are the rest of us, right? So like, there's nobody's immune to it, no matter how good you are, right? So for me, what I do to defend against that, and this is something that I picked up from the first person that I ever learned trading from ever, is like, you just go for a fixed amount, right? What like 2% of your account maximum, right? If you can get away with less because you see something, then sure, but like, allow for 2%. For me, that's like $125, right? So for me, that means on the S&P, there's plenty of room to go like this big, right? Because I would just fix the risk to be $125, but then my reward doesn't always make sense. So it's not, there's not one right or wrong way. This is the way that he does it, because he wants versatile risk, so that if he can, like, it would be totally worth it if I was only risking 5 ticks to get like 15 ticks. But for me, if I'm risking $125, that means I'm always risking like 50 ticks, no matter what. and which is this big huge zone right here, right? So when I'm wrong big, but because I'm wrong big, I allow for more breathing room in my trades. There's no right or wrong way to do it. My personal style is to do it with a fixed dollar amount, bigger risk, and allow for more breathing room. But for the guy that I follow, he likes to take the smallest type of risk allowable based on what the candlesticks are telling them. Just two completely different styles. No one is better than the other. You just got to be able to stick with it. But I want to learn from the guy that does the opposite style as me, because I feel like, you know, to me, whatever. That's the way that I want to learn, right? So you can see that it's just kind of a choppy day. Let's zoom out a little bit, get a little bit of the noise out of the way. So you have this break up, and then you have this break down. It's just like, what are you gonna do? I will say that if you zoom out like way out, I don't even think I can show this on me. I have to show this on the continuous, because that's how far back we need to be going. See how this is marked? I marked this off yesterday, I think. This yellow zone right here. See how we're inside of it pretty much the entire freaking day? Yeah, we didn't know, like the market didn't want to get out of this zone in one direction or another. But this zone comes from all the way prior to the COVID crash right here in February, and we're right back at that level. And you can look at the daily candle for today. Oh my God. Like, look at the daily candle. It's just a big fat doji, right? Maybe you need to, maybe I need to get rid of that so that you can see. It's just a doji, right? Doji, if you don't already know, means just like a candle of uncertainty. The open and close should more or less be the same price. If you look here and you look here, the open and close is exactly the same price. Are you kidding me? Right? This is asking for something big to happen very soon. So today was a day of patience. I lost $100 and I really wanted to make it back. I really did. But if you look at the day, the way that the day ended, this is a doji candle. It's like whoever tried to make big moves today, they were just rushing it, trying to force it, and probably got chopped up. There wasn't any real reason to be long, but like, here's the extra tricky part. Tomorrow is Friday, and Friday is kind of like sometimes a fake out kind of day. Fake out Fridays. I don't know if that's a real thing, but it certainly feels to me like Fridays are like a fake out a lot of the times, because the institutions are settling for the week, right? And you don't know which way they want to do it. But the fact that we have a doji for today, and we're also at the same level on the S&P as when we were at like pre-COVID, like right before the crash. To me, that's super significant. Could we have another doji day tomorrow? Absolutely. Could it kind of range? Could it stay like back and forth? Yeah, sure. But the odds are it's either going to spike back down, or something's going to happen over the weekend that is really good news, and the market is ready to spike back up. A daily doji candle is definitely not anything to ignore, right? This calls for special attention. So if you're a trader, you're trading futures, you're in the S&P. I mean, I'm not an advisor, whatever. I'm not giving any advice, but tomorrow is a day to watch out for, I think, anyway. And let's see what the daily candles look like everywhere else. You know, Nasdaq, boring. Russell, almost exactly a doji, right? Just 4 ticks away from each other, open and close. Dow gets really noisy when I go on this because it just moves so much. Small candle, you know, not a doji, because the Dow moves too much for a doji to be likely on a daily candle. There's way too much movement and cushion there. But you're getting a very muted day today in the equity markets, and I was like, you know what? Today's a day to exercise my patience, right? Oh, on the wait a minute. Oh, so like on the contract specific, it doesn't look quite like a doji. It is a little bit different. But on the continuous, it was a doji candle, right? So uh, definitely this is asking for a giant breakdown, maybe a quarter, definitely at least a quarter down, maybe two, maybe even all the way down to here, and bounce back off the 3,000, 3,300 because it's a nice even kind of big dime kind of a number. Maybe even down to the white line, which is the 250, which is even stronger number because it's a big quarter number. But I think we might see this kind of drop down because we're at the area where it's ready to do it. You might not actually see it. You might see a engulfing candle, like you might see something that looks kind of like this tomorrow, right? You might see something like this tomorrow. I don't know. I think it's kind of just waiting for some kind of news to happen to make a decision. Anyway, so I took a little bit of a hit there, but even though I'm right now, I try to just play the range a little bit, just with one contract. And so you can see that I got triggered on a couple, and I was down about $200. Because I took another trade on like soybeans or something like that, and it was an expensive contract, so it actually chewed me up for about like $120 or something. So at one point I was negative like $200 something for the day, but I made some of that back, and I just chopped into it a little bit and minimized my losses a little by taking just like these small. I had very little confidence after this after the way that it was kind of stalling out near the top end of this here, right on the like this morning, right, like that it wasn't ready to do like a huge move up or like a huge move down, and you can see that like it was like it was just choppy, right? So I did take a short somewhere up here, right, and I didn't get stopped out. I think I took a profit down here because there was just huge level of support down here. Maybe I could have squeezed it more for a little bit more, but I took a reversal position. So like this is what I'm doing inside of a range. Like I'm playing both long and short of the range, but I'm giving myself breathing room, right? You see how I talked about how this is a great example. I don't know why I didn't give this example before, but the example of giving your trade more room. So my trade right here, right now, is actually this is so confusing sometimes. Okay, so like if it's 33.5, so I have $50 risked on this trade, right? That is half of, or like maybe a third of my maximum risk. But I was like saying like, you know what? I don't believe it's going to break through all of this. If I wanted to be a little bit more aggressive, I should have moved my stop all the way down to the quarter, right? It's because I didn't think it was going to get past this area of defense right here, where there was a lot of price buildup, right? A lot of tug of war action. So I reversed the position, right at the line that you're seeing here, and we'll see what happens. But I'm okay with that. So I do need to. Market's about to open real quick, actually, in about a minute. But I do need to set this stop and change this as 1. I don't know why I can't do it. Let's cancel it. Can't do that either. Okay, so I guess I gotta wait until the market is actually open. So let's finish up by talking about my Euro and New Zealand. So I'm in Euro dollar long because I had the good to cancel order sitting here since yesterday, I think. And I had this earlier today. I also took a New Zealand right, which is right here. I should add that to my list. Okay. And I have that short because this was a trade that my mentor was suggesting. It was his idea, right? And I took it from way up here, right? And like I love when he picks an area that is also my area. That gives me more confidence, right? Because he picked this zone. I don't remember exactly where, but it was like around here, something like that, right? So he was recommending getting in on like a 73 and put a stop at the 80 or something like that, right? And I was like, sweet, a 575 is the big number off the 500, right? The three small quarters off the 500. So to me, that's like a huge indicator of like there's like multiple reasons, like two different styles of trading is looking at the same area. That's a really I was very confident about that. So even though this is a very expensive contract, and a full point, it was like way outside of my my allowable risk. Like, I mean, you can see that I moved my stop, right? But like the if I were to have taken this trade again, my stop was 10 points. It was 100. Okay, so it wasn't that bad. It was $100. I think. Oh, that's right. That's right. So the reason so normally I like to take currencies with two contracts so that I could take I could take a 1-to-1 for one of the contracts, and then I ensure a break even or free contract or free trade so that I can I like to let currencies run, because currencies tend to kind of trend and flow better for a longer period of time, and it makes it easier to like scale in and stack contracts, right? If you've been following me, you saw me do that on the euro dollar. That was how I made the majority of my money in July, right? So I want to do that with a contract, but I also need to manage my emotions, and the way I do that is by taking a 1-to-1 profit to ensure that even if I get stopped out, I've had a free trade, right? I don't lose any money, minus commissions, which is like nothing. But if I were to have done that here, I would have had to risk two contracts, which is $200. That's a little bit too much, and I was already down $200, and I was just like, I don't know, I'm not really feeling it. Obviously, I wish I could go back in time and take 5 contracts because it was working, right? But I kind of disobeyed my own rules because of a risk management factor. It'd be a $200 zone, and I was like, I don't know. I'm just gonna take the one contract and kind of see what happens. And so right now, I'm set up for a. I already have a 1-to-1 locked in, I believe, right? How many pips am I up? I'm up 20 pips, right? That's locked in. Let's make it an even 20, right there. Okay. So I have 20 pips locked in, guaranteed. I don't like doing this because a lot of times you'll see with currencies, it'll like stop me out, and I'll make money, but then it'll shoot down further, and I don't really like doing that. But like I can't help it if I only have one contract, so it's like that's why I like to take 2 contracts. But it was just one of those risk management things. But here's the thing, I'm short the New Zealand, but I'm long the euro dollar. Right? Both of these trades are traded against the dollar. So if the dollar goes up, then one of these trades is going to work and the other is not. So it's like, I don't know. I don't really want to mess with it. But I don't know. I hope that the euro skyrockets and the New Zealand tanks. That's really what I'm kind of hoping for right now, so that the fact that they're traded against the dollar matters almost not at all. It's a completely negligible factor. So those are the positions that I'm in right now. So I'm definitely guaranteeing myself 20 pips, which is $200 worth of profit. So no matter what happens, technically I would have gained $100 for today, which falls in alignment with my zones. I'm a little. I'm anticipating some kind of. I don't know what I'm anticipating actually tomorrow for the S&P, because it is at that zone where it was like right before the COVID crash happened. It's like we're right there, and you're seeing this on the daily, right? On the daily chart, you're seeing this, right? And you're just like, okay, what's gonna happen? I don't think we're gonna see anything crazy happen overnight unless there's some earth-shattering news that happens, either good news or bad news. I don't know. Hopefully, wait, now I should be able to cancel this. Yep, perfect. And so now I'm gonna add the stop in here, which was, let's just do it like this. And I will lower my stop to below this candle. I think I gave myself 50, but 40 is good. As long as it's below this daily candle. It's below the previous day's low. So I'm good with that, right? I don't believe it's going to break below the previous day's low on this uptrend, right? Sometimes just using the daily candles to measure your, you know, your risk reward is better. And I like, you know what I really want to have happen is, like, this is pure speculation and guessing, but what I want to have happen is, like, you know, President Trump says, like, he knows where we're at. He knows we're right at that point, you know, on the S&P. Like, he's too much of a stock market junkie not to know, right? No matter what your opinion about him is, there's no way he doesn't know. And like, from a technical standpoint, like, there's major concerns with these wicks, right? There's a lot of selling pressure up here, but it's surviving. You know, this is August 11th, 12th, and 13th, right? So it is surviving these wicks still, right? And so and Trump knows that. And so my guess is that he wants this to blast off to the upside so that he can at least start to position himself in a more favorable way for his election, right? For his re-election, I should say. So I want to say, like, and he's not shy about manipulating markets. We know that. We know this, right? And so I kind of want him to say something or tweet something that is going to make the market skyrocket to, like, new all-time highs, so that, like, tomorrow we're going to end the day with, like, news headlines saying, you know, we had the crash in February, but but the S&P made all-time highs in just a short 6 months after the crash. Fastest crash recovery ever, right? I want to have, like, I think Trump wants something like that, right? So that's, like, my guess. That's kind of like, you know, like, from a technical standpoint, we should be looking for shorts. But from my own speculation of like how Trump would probably behave, I think he wants to go up. So it's like, we really have no idea, right? And tomorrow is just one of those days we really gotta just be ready. But for now, I'm just gonna put my profit, you know, way up here in an arbitrary place, only because this platform forces me to have a target. Normally, I would just have an open target and let it run. I'm already in this position because I got triggered, so I'm not going to mess with it. My stop is at the previous low. I'm okay with that level of risk. I'm just going to wait. Obviously, I hope that, you know, something breaks above and we make new all-time highs, because that's what's in my favor. And that would actually be supportive of this, if I'm not... If the dollar goes up, then this helps me. I don't know. The correlations of markets are just in weird places right now. I hope at least this just breaks down and just catches me at a let's say, where do I want to be? Let's say I want to be 35. I want another 20 pips. I want $400 on this, which is kind of greedy, considering I'm asking it to break this previous swing low. But it kind of wanted to do that, didn't it? Right? Yeah. I don't know. We'll see. This is a fat wick that I'm not really happy about seeing, but I'm either going to get $200, I'm either going to make $200 or I'm going to make $400. That's it. Right? That's the situation that I'm in right now. So I don't really like this situation because again, like I said, I like to let things run, but you know, if I only have one contract running and it's not a free trade, this is the best way that I know how. That's how I manage my risk. It might not be the best idea, to be honest with you, but this is the way that I keep my sanity by locking in something, right, and just like giving myself a chance mentally at the next day. So that's it for today's video. We'll see what the S&P has in store for us tomorrow. Make sure you hit subscribe. Make sure you're following my Facebook page and everything like that. And stick around. We'll talk. I'll see you guys tomorrow for another episode of my trading blog on YouTube. And we'll see what happens. Stay tuned and have a good night, everyone.